On February 18th, 2025, something happened that most people missed. The VIX, Wall Street's fear index, spiked 23% in a single session, not because of earnings, not because of inflation data, because of 7 words Donald Trump said about Russia. We may have no choice but to act. Most people don't know this, but geopolitical risk isn't priced into markets until it's too late. Investors spend months analyzing interest rates, GDP growth, corporate earnings. They build models, they run scenarios, they price everything in except war. Because war is binary, it either happens or it doesn't. And the moment it shifts from impossible to probable, everything reprices at once. Not gradually, instantly. And right now, we're watching that shift happen in real time. The data is public. The truth is hidden in plain sight. Trump isn't bluffing. Putin isn't backing down. And the market is starting to realize that the next 6 months won't look like anything we've seen since 1962. Because this isn't about Ukraine anymore. This is about something much bigger. Something that will redefine global power, reshape energy markets, and destroy trillions in paper wealth before most investors even understand what's happening. Let's start with what actually changed. For 3 years, the Ukraine war has been predictable. Russia advances slowly. Ukraine resists with Western weapons. Sanctions stay in place. Diplomatic channels stay frozen. The war grinds on, but it stays contained. Markets learn to ignore it. Geopolitical risk became background noise. Then Trump won re-election, and everything that was stable became unstable. Because Trump doesn't operate like Biden. Biden's strategy was containment. Send weapons, impose sanctions, support Ukraine, but avoid direct confrontation, keep the war regional. Trump's strategy is leverage, and leverage requires escalation. Within weeks of taking office, Trump made 3 moves that changed the entire calculation. First, he demanded NATO members increase defense spending to 3% of GDP immediately, not eventually, now, and he threatened to withdraw American security guarantees if they refused. Second, he froze all military aid to Ukraine and told Zelensky he had 30 days to negotiate or lose American support entirely. Third, he sent a private message to Putin. The contents haven't been made public. But 3 days later, Russia launched its largest missile barrage on Kyiv since the war began. That wasn't coincidence. That was communication, and the market noticed. Defense stocks surged 18% in 2 weeks. Oil spiked to $95 a barrel. Gold hit all-time highs. Treasury yields dropped as investors fled to safety. But here's what most people missed. This isn't about Ukraine. It's about the global order that's existed since 1991, and Trump just signaled he's willing to let it collapse. Because Trump doesn't value alliances. He values deals. And he believes he can cut a deal with Russia that reshapes Europe, splits NATO, and forces China into a corner. The problem is, Putin believes the same thing. And when 2 leaders both think they have leverage, negotiations don't end in compromise, they end in confrontation. Let's talk about what markets are actually pricing in. Right now, the probability of direct US-Russia military conflict is estimated at 12% by defense analysts. That's up from 2% 6 months ago. 12% doesn't sound high. But in geopolitical terms, it's catastrophic, because markets don't price in 12% probability. They price in the consequences if that 12% happens. And the consequences are asymmetric. If nothing happens, markets recover. Volatility drops. Life continues. But if something does happen, if there's a direct clash between NATO and Russian forces, if a US fighter jet shoots down a Russian bomber, if a Russian missile hits a NATO base, everything changes, not just for weeks, for years. Because once great powers cross that line, there's no going back to normal. The entire risk framework resets. Every assumption about stability, trade, energy, currency gets thrown out. And investors know this. That's why the VIX is spiking. That's why gold is rallying. That's why big money is moving out of equities and into hard assets. They're not panicking. They're repositioning. Because the people who manage billions don't react to headlines. They react to probabilities. And the probability of systemic disruption just went from negligible to measurable. Here's what that means in practical terms. European equities are down 11% from their January highs. German industrials are collapsing because they depend on stable energy and supply chains. If the conflict escalates, Russian gas gets cut off entirely. Germany goes into recession. The Eurozone follows. Energy stocks are diverging. U.S. producers are rallying because higher oil prices mean higher profits. But European refiners are collapsing because they can't source crude without Russian supply. Defense contractors are printing money. Lockheed, Raytheon, Northrop Grumman are up 20% to 30%. Not because of earnings, because of orders that haven't even been placed yet. Governments are preparing, and treasury markets are acting strange. Normally, when geopolitical risk spikes, investors buy treasuries. Safety trade. But this time, long-dated bonds are selling off while short-dated bonds rally. That's not a normal flight to safety. That's a bet that the Fed will be forced to cut rates in the short term to stabilize markets, but that long-term inflation will spike because of energy and defense spending. The market isn't pricing in peace. It's pricing in managed chaos. Now let's talk about the part no one is discussing. Trump's strategy isn't to avoid conflict. It's to win it without fighting. He believes that if he escalates hard enough, fast enough, Putin will blink. That Russia's economy is too weak, its military too degraded, its population too war-weary to sustain a prolonged confrontation with the US. He's betting that Putin is rational, that Putin will choose economic survival over territorial ambition. But Putin isn't operating on economics, he's operating on legacy. Putin is 72 years old, he's been in power for 25 years. He's not building a career, he's building a chapter in Russian history. And in his view, the chapter is about restoring Russia as a great power. Ukraine isn't a border dispute, it's an existential question. Does Russia control its sphere of influence, or does the West? And Putin has already decided he'd rather collapse the Russian economy than concede. He's done it before. In 2014, when the West imposed sanctions after Crimea, Russia's GDP contracted 2.5%. The ruble lost 40% of its value. Living standards collapsed. Putin didn't back down. He doubled down. Because authoritarian leaders don't lose power from economic pain, they lose power from perceived weakness. And the moment Putin negotiates under pressure, he looks weak, so he won't. Which means Trump's strategy of escalation for leverage has a fatal flaw. It assumes the other side is playing the same game. They're not. Trump is playing business. Putin is playing history. And when those two games collide, markets don't go up. They break. Here's what happens next. Over the next 90 days, one of three scenarios plays out. Scenario 1, Trump and Putin negotiate. Ukraine is effectively partitioned. Russia keeps the eastern territories. Ukraine joins a neutered version of NATO. Europe is furious but powerless. Markets stabilize. Probability 35%. Scenario 2. Negotiations fail. The war escalates. Russia intensifies attacks on Ukrainian infrastructure. Trump authorizes offensive weapons. A NATO member gets drawn in through a border incident. Markets collapse 15% to 20% in weeks. Probability 50%. Scenario 3. Putin miscalculates. Russia strikes a NATO logistics hub in Poland, believing Trump won't respond. Trump responds. Article 5 is invoked, full NATO mobilization. Markets enter a bear market that lasts years. Probability 15%. Notice something? The probability of stability is the lowest. That's what the market is starting to price in. And the smart money is moving accordingly. Hedge funds are buying volatility. Not because they think markets will crash tomorrow, because they think volatility itself becomes the trade. When uncertainty is this high, swings become predictable, not the direction, the magnitude. Pension funds are rotating out of European exposure and into US domestic assets, because if the conflict escalates, Europe suffers first. Sovereign wealth funds are buying gold and commodities, not as a hedge, as a base position. Because in a world where great powers are in open confrontation, paper assets lose credibility. And retail investors? They're still buying the dip. Because retail always buys the dip until the dip becomes a collapse. And by then, it's too late. Let's talk about energy, because this is where the real systemic risk lives. Russia supplies 15% of global oil and 20% of Europe's natural gas. Those numbers have dropped since 2022, but they're still significant. If the conflict escalates and the US imposes secondary sanctions on anyone buying Russian energy, global supply drops by 3 to 4 million barrels per day overnight. OPEC can't replace that. U.S. shale can't ramp fast enough. Strategic reserves are already depleted from previous releases. Oil hits $120, maybe $140. And when oil hits $140, everything reprices. Transportation costs spike, manufacturing costs spike, consumer prices spike. Central banks face an impossible choice: raise rates and crash the economy, or hold rates and let inflation run. They'll hold rates. Because crashing the economy during a geopolitical crisis is politically impossible, which means inflation comes back. Not the 3% kind, the 7% kind, and the entire recovery of the last 2 years gets erased. But here's the deeper problem. High energy prices don't just hurt consumers, they destabilize governments. When energy prices spiked in 2008, governments fell across the developing world. When they spiked in 2011, the Arab Spring happened. If they spike in 2025, the political consequences won't be contained to the Middle East or North Africa. They'll hit Europe, they'll hit Asia, and they'll hit the US, because energy is the one cost you can't avoid. You can defer buying a car, you can cut back on restaurants, but you can't stop heating your home or driving to work. And when populations feel economic pain, they can't escape. They don't vote for stability. They vote for change, radical change. Trump understands this. That's why he's pushing for a quick resolution. But Putin understands it too. That's why he's willing to let it drag out. Because time favors Russia. They're a net exporter. High energy prices hurt their enemies more than they hurt them. And Putin is willing to wait. Here's what no one is saying. This conflict isn't about territory. It's about the dollar. Since World War II, the US dollar has been the global reserve currency. That status gives America an extraordinary advantage. We can print money and export inflation. We can borrow at lower rates than anyone else. We can weaponize the financial system through sanctions.